Welcome back to Your Average Investor. Today we're talking about big lots, big trade by big short person Michael Burry. Now, if you're caught up with the GameStop and AMC meme stock push this last little bit, you maybe are aware that people also very slightly started piling into big lots as a way to say, okay, if GameStop and AMC are going, what are other meme stocks that are going to have some sympathy traction on top of it? Well, big lots, the reason a lot of people jumped in on this is they thought, all right, this was, I think, the logic they went through was Roaring Kitty bought GameStop, Michael Burry bought GameStop, Michael Burry also bought big lots, therefore there's some sort of pseudo connection, maybe I should buy big lots as well. Well, here's the thing, is Michael Burry did buy some big lots and he filed it in one of his last holdings, but it appears as if he has actually exited the position. He reported a new holding of 225,000 shares, Q4 of 2023, and then Q1 of 2024. It appears as if he has sold that entire position for a very small profit, or possibly even for a loss. But there's no telling. Maybe he's starting to accumulate again on his next reporting. Maybe he'll report a position again. So let's dig into big lots a little bit and look at why he might have done this. So in addition to Michael Burry, Big Lots has institutional ownership of over 60%. That's quite a large amount of institutional investors, including BlackRock, Vanguard, Charles Schwab Investment Management, Morgan Stanley, etc. Let's take a look here at FinViz to get some interesting data as well. Currently, Big Lots has a cash value per share of $1.57. So literally cash on hand of $1.57 per share. They do $4.72 billion in sales each year, but their income is minus $481 million. So they're operating at a loss, and they need to turn that around. Otherwise, they're going to run out of cash, and they'll run out of cash quite quickly. Typically, a company like this, when they're looking at running out of cash, they've got a couple options. One, of course, is to reduce costs or increase revenue through normal business activities. The other is to sell shares on the market, which is considered a dilutive measure and often drives the price of the stock down. In this case, Big Lots also has a very small float, only 28 million shares. And again, remember, oh, look at this. This reports almost 80% institutional ownership, where NASDAQ.com reports 60%. So between 60 and 80%, we'll call it. If it is 80%, this short float gets even more interesting because that means that the float short is less than the total number of shares available to retail investors, retail traders. But we'll just assume that it's 60%. We'll assume the float short is 25%. That's still an incredibly high amount of short volume. And possibly that short volume just increased with the recent price surge and then moved back down. And here's what we need to look at as well. Let's move down just a little bit here. Take a look at this. We're gonna look at this charts in just a second, so stay with me. Hey, also please subscribe if you haven't already. Helps out support the channels. We're working to get this monetized so we can keep putting out good content. But this is what we want to look at, right? Total revenue, 2023 versus 2024. Their revenue is down. They went 5.4, and this is probably in thousands. So that's probably 5.4 billion, and then they're up to 4.7 billion, and then their gross profit here from 1.7 billion to 1.5 billion. So not a good trend to see that the company is going down. Oh, also, if you don't know what they do, they have a bunch of retail stores. It's like a discount, like a dollar store type thing, kind of. So I can see why that's concerning, but you look at the insider trading. This is anyone who's an insider in the company. When they buy and sell stock, they have to report it with the SEC. And look at this. What we have all of last year in December were purchases from anywhere from 485 upwards to 629. Now the total value of these purchases admittedly is not a ton. I mean, this is pretty big, 250,000, but 15,000 here, 48,000, 50,000, 75,000 for director level, CEO, VPs. That's not as big of a chunk of change as you might expect. But what is bullish is that they're here buying their own company, and these are the people that have the most information about what's going on. famous axiom goes, people might sell for a number of reasons, but they only buy for one, right? If I'm a CEO and I'm selling stock, it might be just because I have an expense coming up, I want to go on a nice vacation, I want to buy a new house, whatever. But the only reason I'm going to buy is if I think I'm going to make money because I know what's going on the inside of the company. So let's take a look at the charts here. Here's Big Lots over the last several years. For the most part, it hovered between $18 and $50 a share, just bounced up and down and up and down. Had a big dip around COVID, all the way down to $10 before coming up to $73 per share. And since then, massive sell-off all the way down here. And I'm going to zoom in now to just $3.13 per share at their all-time low. And right now they're sitting at $3.93. So let's start adding a couple lines here, right? My first line that I'm going to add is actually right here. There's a nice little base that formed here. They cut below the base up here, but I want to put a line right here. We're going to start our first area that we're basing, right? Because this is a clear downtrend. What we see here is a massive series of lower highs and lower lows, but it looks like maybe we're starting to form a little bit of a base here, and certainly we're forming a base just below it at this level, right? So if you got in at like the 3.5 range, a great base there, and even another base here around the $4 range. Now, in this recent surge, the price jumped real quick from this 3.5 all the way up to $5.5 before retreating with the rest of the market back down to about 3.9. 2 is the bid, 3.97 is the ask right now. So is this a buy? I like the opportunity. I think it's interesting. Now, Michael Burry apparently bought in sometime during 2023, so probably, you know, he averaged in through this dip here, maybe even through this dip here, and held, and then eventually sometime in 2024 he sold that position. He, you know, who knows, he lost confidence in it. He thought maybe I'll have a better chance to buy in later. You don't know why he sold. He could have sold because he thought, hey, I'm going to get a better chance to buy in, and maybe he did. Maybe he got in at a lower price, and that will be reported on his next the next report for Scion Capital, or maybe he just no longer believes in the position. So that leaves it to be said, do you believe in the position? Do you think Big Lots could have a turnaround? Could they reduce expenses enough where they can take that massive, I mean, again, remember, they're making revenue of $4.7 billion a year. That's their sales, $4.7 billion. Granted, they're losing $500 million a year, $480 million, but if they can cut costs, if they can cut operational costs by, say, $1 billion, now they're turning a $500 million profit every single year. Now that's a lot of expenses to cut, and if, depending on where these expenses come from, if a lot of this is on like variable rate loans, that could explain why they're all of a sudden underwater with interest rates going up. If their monthly payments on those loans went up, then, you know, that could be causing some concern. But it looks like the Federal Reserve is keeping rates where they're at. They're not lowering yet, but they're also not raising anymore, which could be good. That gives these guys a chance to breathe, cut expenses elsewhere, and figure out what exactly is going on. So, personally, I think it's an interesting buy. I would probably play it with a very tight stop loss. My stop loss would be actually here at the low. So if it breaks 3.13, I'm out, because then we're likely going to be, you know, continuing this downward trend to like 2.5, maybe 2.65. But I think the upside potential's there from $4 back up to maybe $5, maybe $6 again. The other way I would look at this is possibly playing some leap options. Now, unfortunately, these leap options are going to be super juiced right now, because the implied volatility went off the charts when this started getting associated with GameStop and who's the other one? AMC. So let's see if we can find out. Wow, nobody's purchased these. Let's go here to these like call fives. There we go. So look at these call fives, right? They're not that bad, I guess. Depends on where you get in the bid-ask spread. So over the last little bit, they've traded around $130, come up to $500 here, back down to $160, up to $300, back down to $160, and then here at that last spike, back up to almost $500 per contract. So I don't know. I kind of like it. Like, I think This has a pretty well-defined risk if you want to play options with a really nice upside, right? So if you're going to put in a couple $100 per contract here, and then you need if you're going to hold it till expiration, which you've got 2 years till expiration here, then let's just say at some point during those 2 years they don't even recover all the way, but they reverse this downtrend and they recover up to like, let me zoom back out a little bit, like let's go here. They recover up to like $20 a share. Like, you're going to make really good money on that. Now, if you don't even want to buy that much time, say you only want to buy like a year's worth of time, maybe you find something even better. These calls, they're a little bit cheaper for the call 5s, call 4s. But the other way to do it, and this is one of the ways I really like playing these options, is you would buy, and these might update tomorrow with better spreads, but because there's very little volume here, the spread's going to be pretty wide. But you'd buy that and sell that, right? So now what I've done is said, instead of spending $200 or so, I'm going to spend $23, but I'm significantly limiting my upside. I'm limiting my upside here to a profit of $27, so I'd make about 100% profit. In my mind, that's not quite worth it. I would just buy these outright at whatever strike I wanted. I'd probably buy the $5 strike or less. I mean, $10 strike, it's not that much cheaper, so I just buy the strike 5 and go for that. The other way to play this, of course, is to look at selling some put contracts, some cash secured puts. And this is something else that's really interesting about these very long dated puts is, the company could go to zero, right? Like, they could bankrupt and then you'd be stuck basically holding the bag. But look at this, these put 3.5s, they're going for $100 a pop here. And to collateralize that, you only need $350 for a cash secured put. So making $100 on a $350 collateral, really it's a $250 collateral if you're not using this money, because then the premium received from the put itself ends up collateralizing the rest. So that looks really interesting to me, some cash secured puts here. Anyway, love to know what you guys think about big lots. I mean, Michael Burry sold out on this. Is he going to get back in, do you think? I think there's a good chance he's already back in and just hasn't reported yet. In his next reporting, he'll file that and say he's back in. But it's looking interesting to me. I may start building a position here in shares and in leaps. And of course, as always, we'll keep you updated as we do. Thanks for tuning in. Hit that subscribe button if you haven't. I'll catch you next time.